topic at hand. So I'm just going to open up the meeting real quick as people are still popping on. But thank you everyone for joining us today, participating in another RightCapital Savage and Associates webinar. Today we're going to focus on how you can effectively and simply actually discuss and illustrate tax planning strategies with your clients. I do have Dan Gregoire on, who is our lead training specialist. So he is going to walk you through on how to use the software for things such as, you know, illustrating Roth conversion strategies, tax efficient distribution modeling, qualified charitable distributions, and a few other surprises I'm sure he's going to throw in along the way as he gets into it. He'll probably take about, I would say 30 to 40 minutes to walk through it, but periodically we'll stop questions and so forth. So I would just encourage everyone who's on the line just to mute it. As I'm sure we all know, working remotely, you know, there's been some comical instances of kids running through and interesting things happening. So just mute it, and you know, when Dan actually asks for questions, then you can unmute it periodically through the presentation. But right before we get started as well, I want to thank everyone at Savage and Associates who uses RightCapital to provide value to your clients. I mean, it's been a great partnership so far. Anything that you guys need, obviously, the entire RightCapital team is at your disposal, from support down to myself to, you know, product questions. If we need to get people on the phone for you, we can do that as well. But we'd also love to hear, you know, your success stories on how the software has helped you, and especially, you know, on how it has helped keep in contact with your clients as everyone works remotely. So we're always interested to hear how you're using it, success stories, and so forth. And we also want to hear any suggestions on how you feel we can improve the software, because at the end of the day, you know, our success is very much determined by your success. So we constantly are enhancing the software, and many additions are a direct result of what we hear from you, the advisors. So send your suggestions to support@rightcapital.com. Or just call me with the information, because as an independent company, we still have the flexibility to take all that information, and what we do is we meet on a quarterly basis as an entire company. We review that information, and that's kind of how we make our recommendations. So certainly let your voice be heard if there's things you think we can improve on. Some things we have done over the last 6 weeks alone, really, is where to include all the CARES Act changes. So a very big thing if you're talking about distributions with your clients. Obviously, we've enhanced our budgeting capabilities to include an expense worksheet in the profile section. We've also added a way for you to customize budget categories. So if there's things that weren't in the original categories, you guys can do up to 50, or your client can put it in. What else have we done? We added an easy way to illustrate changes in the investment strategies, so you can have a pre-retirement and a post-retirement investment strategy and illustrate that for your clients. As well as we've done the ability to have you include negative appreciation for things like, you know, expenses, income, or properties and things. A couple of things we have on the roadmap, just to let you know, a couple of big ones that people are very excited about. Number one, in the next couple of weeks, we're going to be rolling out a new reporting. So if your clients want to do, or you want to deliver physical reports or PDFs, we're giving you more ability to change the look and feel of those reports. I've seen some of the mock-ups that they've had a couple of weeks ago, and it looks really, really nice. So I think you guys are going to be happy with that. We're adding two-way integrations with some of our partners, and we're updating our education module. And then finally, one that everyone's been asking for is we're going to be looking at consolidating our task list. So if you do any tasks for clients and so forth, we're going to create the ability for you to be able to customize and sort those things by client and so forth, which should be pretty good. Anyway, so before I move on. I think it looks like we have a pretty full house, so everyone should be signed on now. So what I'll do is I'm going to turn it over to Dan now. Again, just put it on mute. Dan's going to go over the webinar. We'll ask some questions, and then afterwards, if we don't answer all the questions and there's anything else you need, obviously everyone can reach out to me directly. So with that, I'm going to turn it over to Dan.
Well, hey, thank you so much, Neil, and thank you everyone at Savage for joining us today. We know this is a difficult time to really, pencil us in your schedule. So genuinely, we do appreciate you coming in, and it's great to be able to talk to a lot of you and talk to a lot of you again as I see some familiar names in the list here. You might recognize me from being in the support chats, but I am the training lead here at RightCapital. I host all the CE webinars, and I make sure that everyone is fully confident using our product. So as Neil mentioned, there's been lots of great updates recently. So we've been busy doing a lot of training. So I'm really glad that you and your team has been able to come to us here and get a little bit of extra nuance of what we've been working on. Now, I just want to highlight that this is going to be a recorded training for everyone. So ultimately, I will be following up with the recording as well as some just helpful video resources, some new tools we have at our disposal, just to give you that transparency on what we're talking about. So ultimately, you can use this information even after the presentation to go back and reference the details that we'll be doing. So I am excited to say that we'll do a lot of upfront reviewing of some of the background information that's going to help you really dial in a realistic financial plan for your clients in terms of different distribution strategies and making sure that we are essentially setting the correct foundation of the plan to then work on some really unique tools that we've built into RightCapital, like our tax distributions area, like our qualified charitable, donations, contributions, as well as just, appreciated asset contributions to charity. So we have lots of great features, and we're excited to show you all of them today. So I know everyone is going to be, for the most part, on mute, but I would love to, take time after each segment and just make sure that there aren't any questions. So I'll be prompting you when we would love to hear from you to get your feedback as well as your input, and hopefully that can help to really create some transparency with the software and really let everyone know what we're capable of. So with that being said, I'm going to transition over to RightCapital software. So just one moment here, and we'll be within my client portal. So as I'm logging into RightCapital, I'm of course going to be logging in as the advisor here, and we'll be working off of my login to RightCapital. And we will of course talk about the client portal and how that's affected through all of these different tools. But ultimately, there are just a few foundational pieces of information I want to just make sure everyone is aware of before we actually dive into the plan itself. So that actually is going to be all found here within the advisor portal, where all the global settings are found. And when we're discussing things like, making tax efficient distribution strategies, it is important to know what RightCapital is doing behind the scenes automatically for you. So just going to pull up our client here that we will be working on today. Of course, we have Mike Brady. He's a popular case study for us. And of course, as I open up Mike here, I have his 4 specific subtabs: the personal info, client access, settings, and plans. Now within the settings, I just want to quickly highlight a few of the things that are really important to just know that are here before we start actually building in these different sequence of distributions or Roth conversions or qualified charitable, contributions or donations. So what we want to look at here is within the settings, under the planned distribution method, there is going to be a setting for how RightCapital is handling just the initial required minimum distributions that we're automatically going to be pulling from qualified accounts. So as a default, everyone's going to see when they first log in without making any changes, this particular setting for this highlighted client on the left is going to be set to the RMDs are going to just be added on top of any manual distributions that you create. Now, this is an important setting, and this will make sure that those RMDs occur But if you are going to be doing some significant, tax planning with your clients and working on different distribution strategies, including QCDs or charitable contributions, it might be relevant to switch this from that RMD being just automatically added to manual distributions to the second option, which is going to state that we're going to use either the larger of those two values. So for example, if we have an RMD scheduled for $10,000, but maybe we create a QCD for, let's say, $10,000, with this middle option, that'll make sure that RMD doesn't get added on top of that. So we'll just take the greater of the two. And in this way, we can make sure that we're not overdrawing from those qualified accounts. Now, obviously as well, when we're talking about this, we will show, that RMD making up for any difference. So if there was, let's say, a qualified charitable distribution for 5,000 and the RMD was supposed to be 10,000, we would automatically build in the remaining 5,000 as a required minimum distribution. And then, of course, you have a third option just to turn off RightCapital's RMDs altogether if you want to exclusively build in your own distribution strategies. Now, of course, that's going to be a fair amount of legwork. So we do see most advisors going with the second option if you are working a lot with these types of clients. And of course, if this is a setting that you want to just automatically align with all of your clients, it can be helpful just to utilize the global settings, which we can find within the top banner of the advisor portal. So this is where we can take all new clients and make sure that they're going to align with the settings that we would like to see. So for example, in the account tab, under the client presets area, we will be able to see all of those default client settings. And of course, we will have the ability to manipulate that planned distribution method. So just again, keep that in mind as something that you will see within your client's plans, and it will have an impact if you're trying to illustrate things like a qualified charitable contribution. So I'm going to open this client back up here. And just so everyone knows, since we are on the topic of really unique times in the marketplace, if anyone is doing a lot of presenting remotely from RightCapital, through maybe a screen share like we're doing today through Zoom or through, a GoToWebinar platform or Skype for Business, we do have the ability to, of course, hide the client list, which is a really helpful thing to know about. So just a quick tidbit there, if we want to make sure these clients are hidden for, security reasons and for compliance reasons, it's simple enough to do so just by using that gear icon account preferences area. And that's where we can actually automatically hide that list if we need to. So that being said, let's take a look at this particular client. So we have Mike and Amanda Brady here. They are going to be a pretty typical client for us who we'd be talking about maybe some tax efficient distributions, as they are nearing retirement. They're in that kind of key 10-year window. And so as I open this plan up with either the open client on the right or the green arrow to the right of their name, we'll be able to see that this particular client is going to have, a fair amount of assets. They have just over $1 million in qualified assets, with around 600,000 of non-qualified. They are, as I mentioned, in that key timeline right before retirement where they're starting to think about, ways that they can not only accumulate their wealth, but start to distribute that efficiently over their life expectancy. And with the changes that we see with, as Neil mentioned, the passing of the CARES Act, and of course, the passing of the Secure Act, the assets that we're considering that we might be passing on to the next generation, if these clients outlive their assets currently, are really going to have a much larger impact than maybe they would have, prior to December of 2019, as we do see, of course, the implications of things like that 10-year distribution rule and the elimination of that stretch IRA provision or stretch inherited IRA distribution provision, really affect what that beneficiary might be inheriting in the future and what kind of impacts that's going to have on their life expectancy and their income over time. So we do want to make sure that you have all the resources at your disposal to really modify and look at this plan in a way that you can really highlight your value adds. And there's of course some significant changes that we've made that's going to make this a whole lot easier. Now, when we are looking at this plan overall, of course, we can get a really good idea, of course, of that picture of where the clients are today with their dashboard and investment tabs. That's going to really have that clean visual for painting the picture of where are we today with our assets, with our actually investments, how are we allocated overall. But in the retirement area, this is where we can really focus on illustrating our value add to the client. And initially, everyone's just going to see, a current and proposed plan when they first access this tool. And that's just going to be a great way for you to have two plans side by side. The current plan stems from the initial data entry in the profile area, while that proposal on the left is an area where we can really make some value adds and then illustrate the benefits to your client. So as a quick example of that, maybe we're changing our asset allocation to maybe have more of a moderate asset allocation pre-retirement, and then maybe more of a conservative asset allocation post-retirement. And again, all those can be built in with custom models, and we can then, of course, compare what that would look like overall in terms of ending assets and the probability of success within each of these plans. But what we're talking about today is, of course, tax efficient distribution strategies, and of course, options that you're going to have to really highlight some features that your clients may not have known about already. So one thing I always like to do is visit the tax tab after the data entry has been completed to see not only what the client's effective tax rate looks like over the course of their planning horizon, which we can see each year of their life, and what percentages we can see for federal, state, local, and FICA taxes as we progress through their ages. But we can also pick which plan, whether we're talking about a Roth conversion plan or a qualified charitable donation plan, or maybe it's a tax smart savings plan. And we can really look at this and how this particular client will be affected by each recommendation that we're making. Now, the details tab is also significant, as it's going to populate all of the new updated tax forms for each one of those plans, for each year of each one of those plans. And of course, within each schedule, these are the expanded schedules from 2019. And we also show, alternative minimum tax and taxable Social Security. So I'm sure many of you have seen this, but this is a great place to, again, just back into those tax figures, get a little more detail of maybe what's coming in as wages versus what's coming in as capital gain within the plan, and really to be able to see all this tracking through is going to help to identify maybe areas where we have inputs that maybe need some adjustment. But the real star of the show here is going to be within the tax distributions tab. Now, this tax distributions area is where we can not only focus on, what clients are going to be in terms of their tax, where clients' tax brackets are going to, end up in terms of their overall life expectancy. As we can see clearly here, the ordinary income lined up with the tax bracket thresholds right over the top of this graph to give us a really clear picture of what this client is, where this client is at in their working years, but also where RMDs are going to take this client in the future. And they might not know that at age 88, they're going to be in that 22% tax bracket. That's might be a shock to them overall. So, this is a great area to, again, just give the client a warm visual that's going to really clearly illustrate what does their actual ordinary income look like with those tax brackets overlaid in each year of their life. So I do want to note that we can change the tax law that we're using. So we can use 2017 tax law, we can use sunset, Tax Cut and Jobs Act sunset 2025, or no sunset. So, and if we wanted to switch these, I just want everyone to know where to access the information to actually adjust those tax brackets. And that's going to be found within the Profile tab under the Expenses sub-tab. So RightCapital is going to automatically input, of course, federal, state, FICA taxes based on the data entry. But in the taxes and fees card, you can also change any or implement any local taxation, whether it's a municipal or just a local tax in your specific area. But this is also a really important place to change the tax law. And as a default, again, everyone should see when they first log in that we will be using Tax Cut and Jobs Act Sunset 2025 tax law, which is going to include that sunset occurring within that tax distributions graph. So since I've changed that to have the sunset occurring, that's actually going to be why we all of a sudden in the tax distributions area, why we see a little kink in the graph here. So this is saying in 2025, we see that the actual sunset is occurring, and roughly around that age 61, we can see the change in the tax bracket thresholds for each specific area. So we can see, of course, no impact on the 10% tax bracket, but we do see that, 12% tax bracket, change over to a 15%. We see, the shift in pre and post sunset. So this is, again, an important thing to just to know about in terms of what tax law you're using, and to make sure that everyone's on the same page with that can be helpful to make sure that we're all being consistent across the platform. Now, what we are seeing just without any manipulation to this graph is, again, that ordinary income over the client's life expectancy. So we're not going to be listing capital gains, brackets here, but we are visualizing, of course, the salary income. We can see the lull after they retire before, of course, Social Security, and then eventually RMDs kicking in at 72 due to that new tax law. And of course, we also will be building in no RMDs for clients in 2020 due to the CARES Act. So just know that that's all happening behind the scenes if you wanted to illustrate that. And we could also see, of course, the key tax components of what makes up that ordinary income. So we can, of course, see, salary is a large part of it until they retire. And then those RMDs kick in down the road and really ramp up that ordinary income and really ramp up the taxes. So this is, again, just a really great visual to give that extra layer of information to your clients, to show them what their tax picture looks like. And it's a great place to identify what years are we essentially susceptible to breaking the next tax bracket. So we can see from basically age, 74 all the way through age 89, we're bumped out into that next tier. Whereas maybe we could combat that with some options like a QCD or an Roth IRA conversion. So that's kind of what we'll be talking about next. But before we dive into that specifically, I want to highlight that RightCapital is going to utilize a sequential withdrawal strategy as a default. And that's always something you can override. You can earmark specific accounts for specific goals, and I can show you how to do that in a little bit. But we also have options to run through some different withdrawal strategies. And these strategies are basically saying when we need cash flow, when there's negative net flows, essentially, how are we going to be able to, fund those? And as a default, we're going to say taxable accounts first, then tax deferred accounts, and lastly, tax-free, to really maximize the benefit of those tax deferred accounts by letting them grow over time, keeping them off to the side until the taxable accounts are fully depleted. But we can, of course, try other strategies and see the impact, which is going to just be shown to the right of the graph. So our baseline here is, of course, a pro rata strategy, which says if we draw evenly from all of our assets when we need cash flow, basically this is what our tax graphs look like. Sequential withdrawal strategy in this client's case is more beneficial. We get an increase in ending assets of over $1.2 million, which is incredible just on its own. And we can also try out different options, and again, we can choose different distributions in each year just to see what's going to be the best option for your clients with an income distribution card. But some are negative, some are positive, but this is essentially our baseline. We're going to compare against the pro rata withdrawal strategy without conversion. So I do want to just illustrate a few more things here, but I want to just take a moment. Does anyone have any questions on just what we've discussed so far before we get into the actual Roth conversions and other strategies that we can look at?
Hi, this is Gary. I just had a quick question on what you're just going through there. Is one of those options, are they able to, similar to how you're doing the Roth buckets here, are we able to have like a tax efficient strategy of, hey, we want to take from our IRA up to this point and then, flip it over to the things, or do we have to manually kind of create that?
So, Right Capital is going to be bulking these buckets of assets together. So we do have the option to look and see, for example, if we want to pull from tax deferred, up to certain amounts, we can see how much we'd need in each year, but there's not going to be a stop point. But we can implement this within any particular proposal that you have. So if you'd rather use one of these other strategies, you can do that, but there's just not going to be like a pre-retirement, post-retirement option. We could always, of course, enter that manually, Gary, with those income distribution cards to show,
Mhm.
tapping into it for these ranges of years before retirement and after. But in terms of seeing the output on this specific graph and the benefits, we're only going to be able to show over the lifetime.
And one of the strategies that we've been using is, if your Social Security is, 30 grand a year, or your standard exemption is 25 grand a year, we want to take 25 from the IRAs, give you a net zero, tax bracket, and then maybe take some additional from Roth or from, the other accounts to keep that tax bracket, lower. That's what
Sure.
the thought process anyway.
Yeah, that's great. Yeah, and we'll certainly show how you'd go about that when we get to the income distribution cards. I think that's a great point. So,
and real quick, this is Nick. I just have a quick question. It's probably a dumb question, but just want to make sure I understand what I'm looking at. So, pro rata is just saying you're taking from each of the accounts equally, where the standard is kind of depleting the accounts like in that order. I
that is
understand that right?
exactly correct, Nick. So let's just, to give everyone just the full scope of what that actually means, I'm just going to quickly look at those future cash flow tables. So we'll identify a year when maybe we have a negative net flow that we're trying to fund. So in this case, I'll head to those future cash flow projections, and we'll see in any year where the actual expenses outweigh the income, right? We have a negative, and then really we're looking at what order of assets are we pulling this $150,000 from in 2030. So of course I can see instantly by looking at the accounts tab, looking at withdrawal from accounts to see which buckets of assets are being tapped into. Since I did choose that that different pro rata strategy here, we are drawing down evenly, as opposed to me changing this within the actual tax distributions tab. I could then see, for example, what a sequential withdrawal would look like in that similar situation under the cash flow reports. In that same year with that new strategy in place, we can see that, to fund, that negative that we see, we can go to the accounts tab and we can go to then, withdrawal from accounts. And we can see that all of that is coming from the taxable instead. And then you can get even further to see, is it the cash reserve or is it their actual taxable investments? Because we can choose to tap into an emergency fund before we actually get into the other assets. So I hope that clarifies for you, Nick, there.
It did. Thank you.
You're welcome. So let's just take one more step here. So we obviously know that this is your client's ordinary income tax graph over time. We can see what key components are making up that taxable income, but now we might want to be recommending some different strategies for your clients. And this is where we have a couple of options. So first, of course, you can cycle through these different withdrawal strategies to see what works best for your clients. In most cases, we might see a sequential withdrawal strategy. Maybe you're going to manipulate it, as we mentioned earlier, with some distribution cards to cover certain amounts out of certain accounts. But overall, this would be your your fallback. Now, we also have the option here to fill up certain tax brackets with Roth conversions. So this is going to fill up, of course, any available tax bracket over the life expectancy that we choose. So here, as I potentially fill up the 12 to 15% tax bracket, and again, we can see that slash due to the sunset occurring. That's the only reason why we see that. We can see that this is actually going to end with, a fairly significant amount of assets more, that are actually going to potentially the next generation. But we can actually take this one step further with the comparisons tab to say, for example, this proposed strategy where we're going to fill up this 12 to 15% tax bracket with Roth conversions in that prime window between retirement and taking Social Security and RMDs is going to allow us not only to end with X amount more in assets than maybe a standard withdrawal strategy without conversion, or maybe you're looking at a pro rata strategy without conversion. But you can also see how much more of those assets are tax-free. So again, this is where that conversation about that, removal of the stretch IRA provision for inherited IRA accounts really comes into play. So, are you going to want to be passing on, assets that are primarily taxable or tax deferred? Can we increase the amount of tax-free assets that are going to that next generation? So maybe they don't have to take those, distributions that are going to jack up their tax brackets. And in that case, you might even be able to use what we call the estimated terminal tax rate to simulate what it might look like for the beneficiary in the future who's maybe inheriting these accounts to get to become subject to a really high tax rate due to, for example, that 10-year distribution rule that's now in place. So you could, of course, jack up this estimated terminal tax rate, which is just the tax rate that we're going to just essentially apply to these values at the end of the plan. And we can see, what kind of impact that's going to have overall on these values. So you can say, if we're passing on tax deferred assets as opposed to tax free, and there's a higher tax rate on those tax deferred assets, which is actually what we're seeing with this slider. We're saying this is going to be applied to the balance in tax deferred assets accounts at the end of the projection. This can simulate the impact of that 10-year distribution rule really heavily impacting the beneficiary. So again, we can illustrate the Roth conversion. We can show how much more they're going to have in assets. We can show how much more of those assets are going to be tax-free as opposed to taxable. And we can potentially show the impact of, a higher tax rate for the beneficiary in the future if they have more tax-deferred accounts as opposed to tax-free. Now, I know that was quite a little bit of information there, but just to quickly finish off this tab, we also can see, withdrawal from accounts here. So we can see how each one of these accounts is being tapped into based on these strategies, and we can see the account balance overall. So here we can see, obviously, that Roth is going to be set to grow over time, whereas these other, strategies, pro rata or even standard without conversion, are really going to, let that Roth grow, but not quite as much, and we'll see more assets are essentially going to be qualified or tax deferred at the end of this projection. So something to just keep in mind overall, this is a really helpful visual tool for your clients. It's aimed to just allow you to navigate those conversations with ease to, of course, say, here's what tax bracket you're going to be in. Here's what years we can keep you out of that higher tax bracket in retirement. And what the impact of RMDs are going to look like. And you can really find the sweet spot with the client. So what actual, amount of Roth conversions is going to make the most sense, because there's always a balance of what kind of liability your clients are going to take up front. And in this case, it would actually be less beneficial to do more Roth conversions, to the 22% tax bracket. So this is, again, where we can, really illustrate the value in simple terms, but then we actually want to show the next step of where the rubber is going to hit the road, right? And how we can implement this in a plan. And that's where RightCapital has really made some strides in the past month or two. So I'm excited to show you that. But one last piece here before we move onto that and take a few more questions is in the details tab. This is where we're going to be able to see that specific strategy that we've outlined. So again, in the calibration tab, we're identifying we want to fill up that 12 to 15% tax bracket, and the details tab is going to tell us exactly how to do that. So we can see which conversion amounts in which years are going to be necessary, and then those are your primary columns there. The rest of this cash flow worksheet is just going to tell you what is going to happen with these conversions in place, with the extra liability, what income will be pulled from taxable accounts, or for example, we're just looking at the rest of those projections. This is a rollover from a qualified account. So all of this is just kind of being factored in to show you what it looks like. But really, we're concerned with conversion amounts and years. So that's what's going to tell us the details. And we can implement this entire strategy now with the click of one button within a proposal. So we'll show you how to do that momentarily. But does anyone have any questions before I move on to implementing this within a plan? and I did have a good chat question that came in here. Are you able to start this plan in the current year? You certainly can. And that's something we can just adjust within the client settings under that advisor portal area. So that's just something to keep in mind. Just quickly show everyone where that would occur. We can change what the start date is on this plan when we open up the client, choose the settings tab on the right, and then we can just choose again when that cash flow simulation is going to begin. Is it January 1st of this year, as maybe you want, or is it 12 months from today, as the current month would illustrate, or is it January 1st of next year? So just keep that in mind, and that'll change some of the projections. Great. So what I'm going to do next is illustrate how we can take this one step further. So we've used the tax graph to be able to clearly demonstrate those easy visuals. Here's your tax brackets. Here's how we can reduce your RMDs in the future. But when it actually comes into the nuances of what exactly am I going to pay in taxes? What is the direct impact of these actual Roth conversions? This is where we can really win the client over. So what I want to do is actually always organize what options I'm going to be looking at first within this retirement analysis area. So within this tool, I can create a unique proposal where I'm just isolating potentially the impacts of some Roth conversions or other variables within this plan. So maybe I'm adjusting, certain areas here, but excuse me. As we change, between the different strategies, we can then visualize the impact on different plans and essentially, build in different options. So maybe, as I mentioned before, in that Roth conversion plan, maybe we're going to recommend, delaying Social Security till age 70 to open up more options. Maybe we're going to implement that distribution proposal and maybe, work on some other areas of this plan. Now, what we can then do is visualize, what's going to be the impact of this plan? How much more in ending investable assets will I be able to see? This comparisons tab is also going to illustrate how much more in taxes am I going to pay in the years where those Roth conversions are occurring? And then how much less in taxes am I going to pay in RMDs and overall? So this particular Roth conversion strategy where we're filling up that 12% tax bracket is actually going to show $287,000 less in taxes overall. Now, you can also see specifically how much they're going to be paying in that lull, when we're filling up that tax bracket. So obviously, we're going to see some impact here. We're going to double the taxes they would otherwise be paying by implementing those Roth conversions. And again, this is all done with the click of one button in that distribution strategies area. Prior to the update, we didn't have the ability to implement this with the click of one button. You'd actually have to build in each Roth conversion, which is still a really fantastic option for you. But it is something that you want to, just know it is there if maybe we only want to isolate these Roth conversions to, let's say, between 67 and 70. So maybe we want to eliminate the Roth conversions before age 67 and after age 70. But ultimately, this is where we can hone in on that impact to the plan and see the exact benefit, less taxes, more money, and then of course, what is the impact of, having more tax-free assets getting passed on to the next generation? That's a whole nother conversation, but this is where we can really, again, see how this is all going to play out based on the individual investment strategies that we've, actually assigned, or the different Social Security strategies and the distribution strategies. Is there any questions on that piece? Great. So just quickly to mention here, we can also test these strategies out against any different sequence of return scenarios you want to build in. So, let's say you're putting together a strategy, you're diversifying, your client's income, you're making sure they're in good shape, they're have some new distribution strategies. We can compare what would happen if there was another, let's say, 2008 scenario, or what would happen if there was, 1987 all over again. Or you could even build in your own what happens, if we have another March of 2020 all over again. So this is something where you can customize and stress test each of these proposals individually based on the actual drop-down menu on the right. And to take it one last step further, you can always then show, with this in place, what does your client's income look like over their retirement? How are they funding their goals? What kind of savings withdrawals are they pulling on a year to year? What kind of guaranteed income do they have? Are we going to be recommending other income strategies from annuities, or, is delaying Social Security the best option? This is where you can really see, how much they're pulling from those invested assets within this specific Roth conversion plan that we're talking about. So again, it's a pretty easy transition from showing them the benefits of that tax distributions graph and then implementing it into a plan to actually discuss, what is this going to look like and how much more am I actually going to pay in taxes with, each year with these strategies in place. And of course, if you wanted even further breakdowns of this information, you could then always visit those sample tax forms back in the tax tab under the tax estimate details area, and I could then pull up that Roth conversion plan specifically to see, for example, impact on, taxable Social Security, or even just, income we're pulling from certain accounts in certain years. So again, this helps you to back into all those figures. You'd see, distributions from certain accounts in those Roth conversion years. And of course, the impact. So what I want to show next is, what if we don't want to implement that entire strategy? What if we want to implement just a portion of that strategy? So in this case, if I visit the distributions tab and I go to the details area, this is where I can again see what conversions each year are going to be needed to fill us up to the tax bracket, but not push us into the next tax bracket, which is the key here. So these conversion amounts are dollar figures that we don't want to exceed. So maybe I want to, like I said, isolate those Roth conversions from age 67 through age 70. And maybe I want to just do $20,000 each year, because that's low enough. We're not going to push ourselves out into the next tax bracket, but maybe the client wasn't expecting that much tax liability. And so this is where the customization can come into play. That's really helpful. And within the profile tab, within the income sub tab, this is where we can utilize those add income distribution cards. Now, these are a wonderful way to, again, override that sequential withdrawal strategy or whatever strategy you've chosen in the drop-down menu to actually say, in a given year, maybe I want to earmark some, IRA account funds for this expense. So you can certainly do that. But we also have the option to say, for example, from Mike's age 67 to Mike's age 70, I'd like to perform, a Roth conversion, and we can even name this, Roth conversion here. And I want to make sure that, this is going to be converted to a Roth IRA, and it's going to be taxed at the standard rule. So I can then list a Roth conversion here for that $20,000 figure that we were talking about. So hopefully, everyone's, maybe used these distribution cards before, but again, they're a great resource for you to be able to override that sequential withdrawal strategy and create these Roth conversions efficiently. So again, we can, save this in place. We can see it implemented within the current plan, but I also have the option to, set the stage for this to occur. So I'm actually going to leave this dollar amount at 0, so then I can turn it up within a proposal that I'm making. So we do this commonly to, again, set the stage for this to occur only within a proposed plan. So now in this case, as I visit my retirement area, as I head back to my actual comparisons tool to highlight that particular conversion, I can turn off that distribution proposal. I can maybe turn off Social Security, and then I can edit that Roth conversion card that I just created with the custom date ranges, with the custom strategy to say, I only want to do $20,000 in those years that I listed. And in that case, I can now see the impact and what that would have on the plan. I can see, how much assets that would end more with, how much less in taxes we would pay. We're, of course, lowering the amount of total taxes still, but not quite as significant. But instead of doubling the taxation, we're only seeing an increase, let's say, of 6,000 as opposed to, 15,000 taxes. And we're still going to end with more tax-free assets overall. And we can see that, of course, in the cash flows. We can look at the actual Roth conversion plan, and we can look in the accounts to see, what kind of tax-free assets do we have, and what does it build to at the end of the projection. So that's, again, how we can, utilize either that one-click approach or that customizable approach within the profile income areas. And just another thing to quickly mention here, if we're trying to implement other strategies, maybe, charitable giving or other options, we have it in the expenses area. So this is where we can, for example, build in a qualified charitable distribution, or we can donate appreciated assets to charity and list the cost basis here. And so this is a great way that we can choose, QCDs from IRAs, inherited IRAs, annuities, to, again, reduce the tax burden for your clients in specific years. And I can very easily see which years my client is at risk within that tax distributions area to see, for example, maybe they cross an income threshold for the next tier of the tax brackets at age 75. So in that case, maybe I want to do a QCD, at that client's age 75 to avoid that next tier of taxation. So again, that's something that we could do. We could then see the impact on a specific plan, and we can either build it in currently, or we could build it in just within a proposal. So keep that in mind. Again, you can implement that within its own isolated plan, and we can see what the benefits and drawbacks are as compared to a current plan. You can compare and contrast any two options here within the retirement analysis area. So maybe we're looking at that QCD and in what years we want to implement it. So just know we're always going to start the same in these two graphs until we actually make changes to the action items, which will include all the data entry that you initially did, so that we can just isolate changes to a proposal. So again, I can click edit, I can click QCD, and I can implement that within the plan in those years that I built in to see what, for example, $10,000 would do as a qualified charitable distribution during that time. And what impact would that have, overall in terms of invested assets, but also taxation. So obviously see what that's going to do to the client. So again, we can use this to really isolate areas of weakness within your client's plan by using that tax distributions area to focus on what ages are they going to cross into those next tax brackets, where could they benefit from a QCD, or where could they benefit from an actual Roth conversion. And then again, showing them exactly how much they're going to pay in taxes, showing them how much they're going to save over their lifetime. I mean, we see that so often as such a wow moment for your clients when they can see how much they can save in taxes. And then using the comparisons tool to say, and here's the additional benefit. You get tax-free assets that maybe get passed on to the next generation. So I want to open it up to questions. I know we're running a little over, so I want to make sure if anybody has any that we address them now as well. So as I mentioned, this is recorded, so everyone's going to be getting a recording of this, and being able to visualize this, down the road again to make sure everyone's comfortable with the features. But we are really making this as easy as possible for you to see, what's the most beneficial strategy for your clients. What is our baseline going to be, which we can choose within this actual tax tab, and then what manipulations you can make individually on top of that strategy to say, maybe I want to reduce the taxable income even more at age 75. And all of these graphs are fully, adjustable. You can, toggle the different variables on or off to visualize, exactly what you need to see. And if we do want to build in additional proposals, as I had that set up already in that retirement analysis area, it's simple to build in as many different proposals as you'd like. Just simply use that advisor portal landing area, highlight the client you're working on, and then just visit that plans tab on the right. And this is where you can organize those wants and needs for your clients, and then directly compare and contrast any two of them, and use that within the reporting as well.
Hey, Dan, quick question. Is there, and obviously you guys have done an awesome job of continually, making improvements and updates. Do you guys send out, and maybe I've missed them, like almost like an update sheet of like, this is what we've changed in the quarter, or is there a way to access it inside the RightCapital site? Like here are the enhancements we've done, just so like as people are, just as staying up to date as possible with what this tool can do.
Absolutely, Nick, and thank you for bringing that up. We will try to send off emails in our weekly updates, so keep an eye out for those. We'll tell you about new webinars and new product updates that we're making. But in order to see how much work we're actually doing here, I recommend everyone take a look within everyone's advisor portal under the gear icon under the updates subtab. And this is going to show you just how much work our engineers have been doing. And really, it's quite amazing. I mean, I've been with the company for a fair amount of time, as I know I've spoken with a lot of you on the chats, and we work so hard to take the feedback that you give us and turn it into real tangible updates in the software. And we're not tied to, some other board of directors somewhere. We're really tied to you as our advisors. So you can just see how much we've done in just the past month to really update all this information and make sure that, we're working for you to keep information flowing in that you want to see. And so really, I mean, it just goes on and on here. So, and I'm sure everyone, has, potentially, asked about, hey, do you trust owned properties? And we hear you and we actually make those changes. And you could be confident that every bit of feedback we get gets sent directly to the people who need to hear it. And whether that's by emailing Neil or whether by using the live chat feature, I mean, we're here for you, and we're genuinely putting this through to people who are making those decisions, prioritizing, and then seeing if it's possible within the software. So.
Sweet.
Excellent. Thank you, Dan. You did an amazing job. I know we're pushing up on time. Before I close it out, are there any last minute questions for Dan on anything else that he covered today? Wonderful. I mean, I learned a ton, Dan, so thank you again for that. I always say to my advisors, there are two things, because the software is incredibly easy to use overall, and to be able to illustrate and help those presentations for your clients. I always joke that the two hardest things for it is, number one, getting the correct information from your clients, right? Unfortunately, we can't really help you with that information. I mean, we try and make it easier where they can enter things in and engage in the software and so forth, but that's always seems to be a little bit of a problem sometimes. And the other thing is just getting used to how you're presenting the information to your clients. So Dan went over a lot of information, and sometimes in an hour it looks overwhelming, but we are here to help. So you can dial into the support team. As Dan said, he's going to send out this recording, but if you need us to create additional webinars, additional training for you, just reach out to me. Let me know what you guys need. As I said, you're a valuable client to us. We want to make things easier for you, so just let us know what we can do for that. We certainly do appreciate your time today. Again, I hope you learned a lot, and if there's anything else we can do, certainly let us know. Thank you very much, everyone. We're going to shut it down then if there's no further questions, and enjoy your afternoon.
Thanks,
I was going to
sir.
say weekend because again, I keep forgetting what day it is, but it's only Thursday.
Thanks, Neil. Thanks, Dan.
All right.
Be safe.
You too. Thank you.